All right, traders, it is the 2nd of July, 2017. My name is Jameson. Welcome to Behringer Trading. We are looking at a daily vertical bar chart of Abercrombie and Fitch. The ticker is ANF. We are seeing some weakness here in the RSI. However, we've kind of broke the current downtrend that's there. So just below 50, little breakout. Kind of say it's in neutral, but the potential is present that it actually would break out higher. If we look at the performance relative strength-wise, pretty neutral position here. Kind of exhausted the angle of a decline here between the relationship between Abercrombie and the Vanguard Total Stock Market Index. The sector here has been underperforming, kind of maybe found a bottom, might rally a little bit, and the index actually is starting to see some participation. So if the index starts to see some participation, ANF may also be one of those ones that money rotates into. It certainly looks like we're starting to see some accumulation this year. We're starting to see that supply is contracting, and we're seeing some nice demand off these lows. However, this kind of disinterested, kind of lower narrow spreads and volumes tapering off, very characteristic of phase C. So we probably have our our phase A, phase B, phase C is in the process. I was going to take this off the list, but I think I want to I wanted to share where the trade exists here. So we can appreciate that obviously the 200-day moving average and the 50-day simple moving average are converging here. There may even be a golden cross that presents here in the next couple weeks, if not next month. So there's a lot of demand. The demand failed to make a new high, so I think we saw some distribution that resulted in prices coming down. We've seen an attempt to kind of maintain this level here in the 50-day moving average, but there's really not a lot of demand, and we did see a little bit of supply. So that might mean that we're going to see a terminal shakeout. So I don't want to advocate buying here. I'd rather buy confirmation or get a lower risk entry down here. So if prices do rally and we break this 200-day simple moving average, you can enter a quarter position on that rally through the moving average, and as it pulls back and confirms it as support, you can enter a larger position and then build your position in the strength in anticipation of trading these upper price objectives. The next trade is maybe we are seeing a little bit of supply, we're having some weakness, we're trading into this prior level of support, maybe we're conforming this support as resistance, and then we break down, we shake out all these these weak hands that are here. On this breakdown here, this would be a great buying opportunity. Obviously, it would be certainly a lower risk entry, and you just put your stop loss below this level where the spring was at. And even if you bought here and you got stopped out, if prices re-achieve this level of support, that would advocate buying this. I think that this is reaccumulation. It's just a matter of being patient enough to try to build a proper position. So I like Abercrombie and Fitch. I'm going to continue to follow them and discuss them. I think two trade setups exist, but right now we're kind of in the middle of that trading range, and we would be buying risk at the present time.